Alright guys, welcome to the final video of the advanced section 2. And so basically Wyckoff is going to be what is advanced section 3 is going to mainly go over. But however, everything that I've shown you so far is basically going to be what you use for quote unquote intraday trading, day trading. These are basically the technicals that you're going to use 90% of the time. Right, Wyckoff is going to be only meant for you to understand logic. It's going to add on to volume and just understand cycle that is added on to structure. So what I want to do now is I want to show you how I would use these concepts during the hours that I personally trade. And obviously this is EURUSD, probably one of the main pairs that I trade. Like I can do this on GN or EA or anything like that, but I won't because I don't understand the actual behaviors of that pair. And what do I mean by that is every pair moves the same, as in you can basically backtrack SCs and inefficiencies to every pair on every high and low, but every pair has different behaviors as in how it actually moves. Like some won't do an SC at entry, won't leave an SC at entry most of the time, others will, etc., etc. And that's something you guys will figure out while you're backtesting this on the pairs that you choose to trade. So yeah, all I want to do now is basically show you guys how I would interpret a chart and how I would personally enter these charts using everything that we use so far, right? And so as we can see here, right, we have 3. So I'm going to start after this break of structure here. This range is what we're going to talk about during Wyckoff section. So as we can see here, I basically used 3 purple areas, and these are personally my times of trading. And the video that's going to be in regards to time of trading, what pairs to trade, all that, it's going to be in the extras section. So I just highlighted it for general purposes to tell you which entries I would have got and in comparison to which I wouldn't. So as we can see here, right, this was EURUSD's first initial move, and very impulsive, took out previous equal highs, and that is your structure shift. So now this is where we start looking for buys, even though we've had a very bearish market, right? So now it's just a matter of, using what I've shown you to enter these trades. And this first entry here I wouldn't have gotten because I would have been asleep during that time. This is at 1 a.m., which is the right before the London Open, and I usually trade overlap to the end of overlap, basically just entire overlap, the open of overlap to then the closure of it, and then I look at part of New York after that, but not so much. So during London, right, what do we see? I'm gonna zoom in here. Right, I'm going to show you this first entry that we got, and that was here, right? We see this price come back, potentially mitigate something down here, but it did also make price efficient here. And notice after this drop, immediately price rocketed to the upside. So now this shows me that this is now a valid SC, right? So optimal entry for SC is the 50%, and there you go, right? So let's say, so now we look at the basic how we would have entered in this trade, right? So there's people that would have manually executed at the 50% perfectly, as you can see, or they would have waited for price action. But unfortunately, this entry didn't give you that, that second entry there, whereas they would have actually given it to you afterwards, right? So as you can see here, this is that last sell that made price efficient there and probably mitigated on the seconds time frame. Yes, you can use the seconds time frame on this too. I just personally don't have them, and I won't purchase that package from TradingView until Black Friday comes. So, oh well, we just work with what you have. And so, as you can see on the 1 minute here, this is now a leftover SC. We react to the upside, come back. Now that's there, right? As you can see, price comes back, right? High selling pressure in that last wick there, and as you can see, right, this last SC when we're comparing volumes, right, we're just going to show you just like this. You see high pressure, high volume, right, that was used to push price down to mitigate that 50%. And now notice this last SC has no volume supporting it, which caused the upside move, right? So now we just came back and notice, right, very, very low volume around optimal area of entry here. And this would have been, right, 2.5 pip stop max, right? Perfection at its finest there. And that would have, I wouldn't have even caught that entry just because I was asleep, right? So now let's say what I would have done, right? Here, right, where I would have wanted to enter is now anywhere in this area because this was the last mitigated SC, right? This candle mitigated previous SC. So now I'm going to mark out that open, right? And all of these would have been entries. So let's say I got it. Let's say I wouldn't have thought this was convincing. I would have probably taken it here, right? But as you can see, I would have more than likely broke even, especially here. And that's fine. I would have missed that trade because based off my rules, I probably wouldn't have caught that trade. Unless I would have been literally staring at this, right? We see I get broken even, right? We get a reaction to the upside, right? Notice that there's now this indecision candle here. And that basically shows me that momentum is wanting to go to the upside. And unfortunately, I wouldn't have caught that trade. That wouldn't have followed every single rule that I have. And I just would have missed that trade. And that's fine, right? Whereas if you would have gotten the perfect entry here, right? We're just going to note every entry and just the risk to rewards. Right, so this would have been, do that. All right, cool. So now that would have given that full impulse, right? And now these are all swing trades because we literally just switched, we literally just had structure shift on us. So now this is exactly where you want to look for those long-term swings. So even if these targets are hit, those targets are only meant for me to be partially out, right? So now we skip to 15-minute, we skip to the next trading day. First trading day, I didn't get the opportunity, right? Oh well, it is what it is. So now we're gonna look at the next day. So now we see, right, this was right when I started looking at the charts, right? And what do I see first? I see this random candle here, right? There's a long wick there, so that shows me that price had to come down before it continued. So just by me knowing that, there's probably an SC down there. So I'm gonna scroll down. An SC or an inefficiency, either one could be there, right? And what do we see? We see gibberish here. There's nothing that I personally like there. So we're just gonna keep going through the time frames, right? Nothing. 4-minute, it's starting to look like a bit like an SC there. And so now you could have gone about this trade two ways, right? First way, right, we measure 50%, which is this is probably the more preferred way that we would have taken, right? We're going to basically, I'm gonna just do another line at the 50% there, and your SO would have been right below that blue line. So that fits my rules because there's more body to wick and there is a reaction to the upside that's very, strong in comparison to previous impulse. So that shows me that this is now pretty much a very valid SC. Or for the more advanced, more experienced, you're going to start noticing things like this, right? And that is that, right? Notice we see push up, push down, make price efficient again, and now we had an impulse to the upside, but now this area here is considered inefficient pricing due to the logic behind it, right? Price has now given us buy side without giving us sell side. So now price could come back to that indecision here. So since I have both scenarios, I'm going to put my stop loss, instead of at the closure, I'm going to put my stop loss at the wick there. Because I know that if this candle breaks, right, when we're looking at the 15-minute or any higher time frame, if that breaks, then I know structure will probably, where's my tool? Right here. We'll see price probably start coming down if it breaks that. So if I lose, I know that that's probably why, because I'm probably on the wrong side of the market. Whereas if it works, that's now my my perfect entry. And so what do we see price do? Right, price comes right back, and notice how the inefficiency fill and the SC correlate, and they correlate on two different time frames. That's called time frame confluence, right? That's very good confluence to adding probability to a trade. And so now what do we see here? Our first entry hit perfectly, right? Let's go and zoom into 1 minute here. Don't know why this is being so slow. All right, so we're inside my trading hours, right? And notice, right, that we have an SC here, technically, right? High volume, showing that there is still bearish pressure. But now notice that after that correction and then that last impulse, notice that this candle here has no bearish volume supporting it whatsoever. So now that is enticing me to choose that is time for reversal. So, and not only that, but it's also right in between there. So since my position would have been there, right, my SL, like I said, would have been right under that line there. That's 2.5 pips, right? And then now I'm not going to move my SL until this structure breaks there, right? And why is that? And that's because I want price to fully break a clear level of structure before I move my stop loss, because then that's how I know price won't come back, right? Because as you can see, we created a higher low, we failed to create higher high here, right? Price is now struggling to beat this previous high, right, which is now called equal highs, and that is now a liquidity point, right? So now notice price comes back down, right, with previous volume than before, right, showing that it's probably a false move. And if you would have moved your stop loss too soon, then that would have hit you break even, and that's fine. I wouldn't have done that, just because I know that I'm waiting for that structure break, and if I take the loss, it's a 1% loss. It's risk management, right? So, however, let's say you did break even here, right? So, or if you're just looking at it and you didn't move your stop loss, and now you're in profit. But let's say you did break even here, right? Now you call this a newly found SC. Why? Because it took out this low and it took out all of these relative lows here, right? So now this is now my newly formed SC, because it took out levels of liquidity and then gave an impulse to the opposite direction. So now I'm going to use my fib, right? I want 50% or open, right? Fortunately, we did get that 50%, right? As you can see here. So now either you could have now moved since structure broke, your stop loss is now at break even, and if you wanted to, you could have even added onto this position. Right, here you go, another 1% risk, right? But just, you got to be aware that now that if both of these hit stop loss, you're now down 2%, right? And this entry has 3 pip stop loss, right? Just based off of the rule here, right? Now this is an optimal entry, right? Especially, right, with bullish volume starting to come in, as you can see here, right? Bullish volume's creeping in, right? Bearish volume is very moderate, right? Even if you would have taken your entry here, you probably wouldn't have gotten the confirmation behind volume until that second candle after the entry, right? Whereas you can see no more supporting volume, and that's when you see price start to struggle and then starts going up, right? So now that is potentially 2 entries depending on your plan and how you go about your rules, right? So now that concludes my trading day. Again, I'm holding this trade because I'm looking at the swing trades, even though my first target now is up here, right? My target is right there, 35 pips. Cool. All right, I don't know why this is starting to lag. All right, my bad, guys. As we can see now, we're going to the 15-minute. Now we're approaching our third day consecutively, right? And what do we see here? Right at the start of my day, I know that I don't want to enter right as I'm starting to look at the computer because I know this price is too high. Not only that, but I acknowledge that there's inefficient pricing right here, right? So I know that the only way I'm going to enter this trade or even enter the market at all in this specific pair is if price comes back to that, right? And as you can see, we actually came back to fill it, right? So how do you go about this? All right, let me clone this line. Cool. All right, so now this is my zone of interest. So I'm going to wait for price action, right? Always. I usually, more than likely, I'm going to wait for that price action, right? So what do we see here? Right, so far I'm seeing nothing but lower lows, lower highs, lower low, lower high, lower low, lower high, right? However, this lower high is very close to that previous high, meaning that we're looking at a like a 90 to 95% retracement, which shows that you're probably going to start looking for reversals, right? And not only that, but we reacted from 50% of that inefficiency. So now I know I'm going to wait and see what happens, right? Based off 1 minute, there is no SC, so I'm not going to enter, which means I wouldn't have lost here, right? However, right, and let me tell you why, right? We don't see an SC, but there's always that option that inefficiency can come and fill itself. That's always a possibility, right? Just like an SC, there's always a possibility you're going to go to 50%, even if you mitigated the open, right? So you always have to remember that. And notice here now, we come and we now are at the open, and you could have taken your initial risk at the closure here, right? Except now your stop loss, you would have been guessing it, right? It would have been, I mean, 2 pips would have been fine, 3 pips would have been better, but I want to wait and I actually want to see what's going on. So what do we see here? We see volume start to diminish right around here, which is where price is starting to struggle, and it's probably going to start shifting. And as you can see, we reacted from the closure, right? We broke scalp structure, so now we're looking for a pullback. And how do I know where to pull back? Well, this is my last candle here, right? And why am I choosing this candle as an SC? Is because, as you can see, it actually took out that previous low. Took out the previous low, right? Took out liquidity of this previous low and then reacted to the upside, broke scalp structure. Now I'm looking for that pullback for entry, right? And like I said before, during these smaller time frames, I'm going to use the entire candle. So my new position now would have been aggressive to have 1.5 pips, but just to be safe, I'd put 2 pips, right? And from there, that's instant profit, and it's right inside my kill zone, right? During the hours that I trade, 5 a.m. to 11 a.m. CST, right? And so this is now an entry, right? Now we fully broke intraday structure here, and now we're starting to see price roll over to the upside, right? Let's look at the 15-minute. Right, and now we see price fully start to extend, right? And all of this came from a simple break of structure here. Simple break of structure. Right? Break of structure, correction, impulse. Right? Like we even said before in the momentum video, right? Look at the distance in this upside move here. Right? Took an hour and a half to get there. And to correct itself, it took 2 days, which is way longer than an hour and a half. Right? So just by that, I know momentum is shifting to the upside. So now all I'm doing is wanting to catch these continuations to the upside. And let's say each trade is 1% risk, right? To where current price is there. Every single trade in very hefty profit. Every single trade in hefty profit, right? Not in terms of pips, but in terms of percentage, right? 59 to 1. What is that? That is 46 to 1, 47 to 1, just around it. 38 and 45. Right, so 45 plus 38, right? 82 plus 46, that was 46. 82 plus 46, that's 88, 128, right? Roughly, hopefully my math isn't wrong. And 128 plus 60-ish, that's going to be 188 to 1, an accumulation of 4 positions, right? All drawdown, and one would have maybe broke even depending on how your plan is, right? Either way, your win rate is extremely high just because I followed the rules in my plan, and they're all on 1% risk, right? I'm not going to risk 2% because I don't want to lose 2% on 2 pips. I think that's just no. And once I start looking into capital above 6 figures, 7 figures, all of that, it's going to be all less than 1% risk, and you're looking at hefty gains if you can really master this style, right? So yeah, guys, hopefully this wasn't too confusing, but that's basically top down on EURUSD in this range using everything that we've learned so far. And so yeah, guys, hopefully you guys enjoyed.